Hello, good morning, ladies and gentlemen. How are you doing today? Hope you having a wonderful day. And how well are you preparing for the New York session today? So, for the sake of clarity, for us to be on the same page here, I will appreciate that you type in hi in the comment section to confirm that you can see my screen and at the same time you can hear my voice clearly. So I would like to see some feedback in that regard. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section. And then let's get this party started. Okay, so what do we have in the comment section here? All right, 298, good morning, thank you. Sarge 82, good morning. Moy 79, Mia Gigi, good morning to you. How are you doing today, Mia Gigi? HB hi, all right. 428, good morning. Hey Carrie, good morning to you. Glad to have you around. Mumps, okay, good morning. So I will take this feedback as a confirmation that we are good to go. In that regard, pleased to welcome you to another promising session on the X-Trend Speed. My name is Sheriff Daramola, and as usual, we shall be embarking on a trading journey for the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us during the New York session today. Well, it's another day, the second trading day of the week, and in fact we have been witnessing some profits in some of the trades we have been monitoring since the beginning of the week, and definitely we are going to be reviewing all the instruments we have been monitoring. We want to see how well the pairs are doing, and then we shall be planning against the New York session for today. And it's also possible if you have any pairs you want us to look at, and it's still, the week is still very early, so we could still accommodate some suggestions in that regard. So if you have any pair, commodity, cryptocurrency, whatever you want us to be looking at today, please feel free to drop it in the comment section and I will try to incorporate it into our plans for today. So with that being said, let's dive into the market and let's see what is really going on at this point in time. Before we go into the chart here, it's important we look at the macroeconomic events, as we have a couple of them happening today, and we want to be seeing how well these participants in the market will be anticipating this event. And for today, we only have the euro, and what we see here is the GDP, that's the gross domestic product, and it appears to have happened a couple of minutes ago. And with the look of things here, it seems very positive for the euro. And remember, we have a pair that we are monitoring, and that is the EURJPY. And it's very likely that we might be seeing some bullish momentum on the EURJPY, considering the current structure we have there. So we have a variance of positive 0.1% for the quarter on quarter. And then we have a variance of 1.9% for the year on year here. So it's quite positive. So let's see how we are going to be taking advantage of any trading opportunity there. So with that being said, let's dive into the chart right now and let's see what is really going on at this point. So the first commodity we are going to be looking at this morning, as usual, is the US oil. And on the US oil, we have a profitable situation going on right now. And I would first of all take you through what our expectations were during the live session yesterday and how we planned to take advantage of trading opportunities that might evolve during the New York session yesterday. So the first thing we observed here on the US oil yesterday was the fact that price was initially caught within a channel, and that was around the $80.50 level, where we had the resistance point for this week. And then we have the support level for this week sitting at the $79 area. And in fact, during the live session yesterday, we saw some bullish momentum around the $79 area here, which we said we want to be looking out for how we could take advantage of that opportunity. And remember that whenever we have a flat channel like this, we either look for a breakout of the channel to give us an opportunity to buy, or a breakdown of the channel to give us an opportunity to sell. However, because of the buy pressure we noticed around the $79 level here during the live session yesterday, I said there is a tendency that we might be having some bullish momentum. And if we take into consideration the $78 area, which has been a strong buying niche for participants in this market throughout the course of last week's trading session, coupled with the buy pressure we noticed at the $79 level, we anticipated a buy position with the hopes of this move might likely break out of the $80.50 level to incite another wave of bullish momentum. So this was our expectation during the live session yesterday, and we actually joined at the hold on a second, we joined around the $79.20 area, and price action moved about 60-70 pips thereabout in our favor before we saw this engulfing bearish candle taking us out of that position. So you must have taken some profit, and at a worst case scenario, you would have been taken out of that position at break even. And remember our expectation at the beginning of the week after identifying this channel between the $80.50 level and the $79 area. We said either a breakout of the channel will give us an opportunity to buy, or a breakdown of this channel would give us an opportunity to sell. And what we saw here during the New York session, I think a couple of hours into the New York session, we saw the breakdown retest of the $79 area, giving us a beautiful signal to join that decline to the downside. And I hope we position ourselves in such a way we can catch that move, as price action was triggered at the breakdown of the $79 level, did a retest of structure to give us further confirmation, and price action has continued to drop to the downside. And if you are taking advantage of that breakdown of the $79 level, kudos to you, as you will currently be running with over 240 pips in profit. Then we also had another breakdown of structure at the $78.20 level. We had the breakdown retest of this level during the later part of the New York session yesterday, hereby negating all the buy pressure we have been noticing around the $78 level throughout the course of last week's trading session, to give us a beautiful signal of a possible sell-off in this market. And that was another opportunity to add more position. And if you had done that, well done for being on standby to catch that move, as you will be currently running with about 140 pips. And if you have two positions running right now, you will definitely have a total of about 380 pips in profit. So we are doing quite well on the US oil so far for this week, and what we want to be doing right now is we don't want to get too carried away with this profit. We want to be moving our stop loss accordingly to lock in some profits at this point. And if we look at the current structure here, I was able to see something around the $77.50 area, which was a technical structure before that breakdown happened a couple of hours ago. So I will be suggesting at this point we should be placing our stop loss somewhere right above this level, so that we can give price action some breathing space before probably which might come in form of a retracement back into the structure to incite another wave of bearish momentum. So let's move our stop loss accordingly. Let's lock in some profit here, and let's prepare for the New York session today. So what is going to be our plans for today? What are we intending to do for today? Are we going to continue to sell the US oil? And if we are going to be selling the US oil, at what point, at what level, or what zone are we going to be taking advantage of a trend continuation? And if price is going to be doing some reversal setups, what are we going to be looking out for? Well, stay tuned in so that you don't miss out on any of these ideas we shall be dishing out from this point in time. So the first thing we are going to be doing right now is to scale up to the daily time frame. We want to be seeing what is really going on from an holistic perspective to decipher if the sell momentum we are in right now is still going to be valid for us during the New York session today. So in that regard, we shall be scaling up into the daily time frame right now. And for those who had actually missed out on these opportunities we had in the last 24 hours, the week is still very early. So I still think that we'll still have some opportunities to join this move if really price will be going further to the downside at this point. So let's go up into the daily time frame at this point and let's see what is really going on in this market. So as at yesterday during the live session, we saw what was happening here, and we laid much emphasis on the fact that price action has been bearish in the last 6 to 7 months now, and as a result of this, we connected a series of lower highs here, which gave us this bearish trend line that you can see that is being highlighted on your screen right now. And zooming into the current structure here, that is what has been happening here since the beginning of this year. The first thing we observed is how the $80 level has been a major determinant of price action. The $80 level has been a strong selling niche if you notice closely into what has been happening around that area. We saw selling attempts here. We saw bearish engulfing candle dropping below the $80 level here in the month of November. Then we saw another attempt by the sellers later on, I think the last day of November stroke the first day of the month of December. We saw another selling pressure from that level. Then during the end of last month's trading session, we saw our price close around the $80 level, and as soon as the new year began, we saw an engulfing candle dropping below the $80 level to further emphasize the strength of the sellers at this juncture. And remember that we initially identified a reversal pattern here at the beginning of the year, where we said we might likely be seeing a bullish momentum if this reversal pattern becomes mature. And to further guide our trading activity, we had a neckline for the reversal pattern identified, and coincidentally the neckline shares a beautiful confluence with that key level we had at the $80 area. And whenever we have a neckline like this, after identifying a reversal pattern, we want to be seeing a significant breakout of the neckline area to give us a confirmation that that reversal pattern is valid, and then we shall be getting ready to join a bullish momentum. However, a couple of weeks ago, we saw the breakout of both the neckline area, which also shares a beautiful confluence with that bearish trend line we identified earlier. And with a breakout of that structure, we were hoping that price action will continue to the upside at this point. But for the last 2 weeks here, we saw selling pressure around the $82.50 level, which has been negating all attempts by the buyers to continue to the upside. So despite the fact that we had a reversal pattern, a double bottom structure, a neckline area identified, we can see that price didn't go as expected, as we saw selling pressure resume at any time price gets into the $82.50 level. So in fact, in the last 2 weeks here, price action was caught within a consolidation phase between the $82.50 level and the $78 area to emphasize the level of indecision that is in this market at that point in time. And you know, from a technical standpoint, whenever we have a flat channel like this, we need to really be patient to wait out for a significant breakout or breakdown of that channel to give us an information of where price is likely going to be going. So it's either price breaks out of the $82.50 level to give us a buying opportunity, or price breaks down the support level at the $78 area to give us selling opportunity. And what we are seeing right now in the last 24 hours is quite interesting, as we already see a breakdown of the $78 area to further emphasize the strength of the sellers at this point. Now, with a breakdown of the $78 area, the next question we want to be asking is, Is this going to be a bearish signal where we want to continue to look out for opportunities below the $78 level to join a decline to the downside? And this might likely come in the form of a retest of the $78 level with selling pressure right below the structure on our lower time frame, then to add more position to our existing trade. And remember, we're already in a sell position which we took advantage of yesterday, and we are currently running in profit at this point, and we've moved our stop loss accordingly to lock in some profit so that we don't get stopped out if price action moves against us. And if we look at the trend line that was broken here a couple of weeks ago, it's a beautiful sign that there is a bullish momentum, but the negation of bullish attempt at $82.50 level has negated that attempt. But one thing we also need to take into consideration is the fact that we had a breakout of the neckline, and from a technical standpoint, we expect that one point in time price might likely come back, do a retest of that trend line, which also shares a beautiful confluence with the demand zone at the $75 area, where we might likely be seeing some buy pressure around this area in anticipation of another wave of bullish momentum. And with the information we have here, and taking into consideration the fact that the OPEC Plus is having a meeting on the 1st of February, which is coming up tomorrow, majority of the market will definitely be anticipating that event, and they are going to be making a decision on their profit, on their production target for the year, and whatever they say in this meeting will definitely send some huge signal into this market, where price might likely skyrocket to the upside, or it might drop further to the downside. And in this, we want to really be on standby to catch either of these opportunities that might likely happen. So this makes this current structure a critical point at this point, as price action has continued to approach the $75 area, which also shares a confluence with that bearish trend line that we identified earlier. So what happens around this area on our lower time frame from a technical standpoint will be determining what our next line of action will be. So if buy pressure comes in around this area, retesting that bearish trend line, we might likely be looking out for buying opportunities. But if price breaks down both the $75 level and the bearish trend line, this could likely incite another wave of bearish momentum. So we want to prepare ourselves at this juncture here to be able to catch either of those opportunities as price action is being monitored. So at this point, we will want to scale down to a much lower time frame, like the 1 hour time frame, where we want to be seeing what is really going on right below the $78 level to decide what our next line of action will be for today. So scaling down to the 1 hour time frame at this point, please feel free to ask me any questions. If you think you need me to shed more light at a particular area I'm just explaining, please feel free to do so. So going down to the 1 hour time frame, this is what I was able to see here. Let's go back to the structure we have here, or should we look at the 4 hours time frame before we go into the details here? So this is the 4 hours time frame initially. And remember that this was a structure we identified earlier, where we said since the month of November, price action has been caught within a channel between the $82.50 level, where we have been witnessing selling pressure in the last couple of months now, and then we have a demand zone, we have a support level at the $73 area, which has been a strong buying niche for participants in this market. And in fact, this level incited this bullish trend line that we identified here. So after connecting the series of lower highs here, we had this bullish trend line figured out. So since the beginning of last month, price action has been bullish, but we've been seeing negation of this bullish attempt at the $82.50 level. And if we look at the current structure here, zoom into what has been happening here in the last 24 hours, we can see that price has finally broken down that demand zone that was unable to break during the course of last week's trading session. That is the $78 level. We saw the breakdown of that structure yesterday, and price appears to be approaching that bullish trend line that has been guiding bullish momentum since last month. So whatever happens around here will be very decisive. We might likely see a sharp rejection of this level to incite a trend continuation to the upside. This is a very likely possibility that could happen here, considering the OPEC Plus meeting coming up tomorrow. Or we could have a breakdown of this trend line, which might likely incite a sell-off in this market. So for those who had missed out on these opportunities that we are taking advantage of in the last 24 hours, well, at this point I will advise us to remain patient, as we might likely see price come back to do a retest of the structure before it moves back into the bullish trend line here, where I'm thinking that we might be having a bullish momentum from there. And if we scale further down into the 1 hour time frame, there is another structure I was able to identify here around the $77.50 level. So I would want to label this structure for the sake of clarity, so that we can have a visual understanding of what I am talking about here. So that is the previous structure that was broken here a couple of hours ago. And for those who had missed out on both of these opportunities that we have taken advantage of here, I will suggest that let's remain patient and see if price will come back into the $77.50 level, do some retest of structure with selling pressure evolving right below that level. Then we might likely join another wave of bearish momentum, where if price drops further to the downside, how many pips move is that from the $77.50? So that's like 130 pips move. So if price action drops further to the downside, we want to immediately price gets into the trend line here, an area which shares a confluence with, hold on a second, let's identify that structure. So we have that structure sitting around the $76 level. So for the sake of clarity, let's identify that structure there. So we have the $76 level here. So I will be labeling it $76 level. So we have a structure there. So that is around that area between the $76.50 level and the $76 area is where my take profit target is actually. So one thing I would suggest us to do here is, if price continues to the downside and comes in touch with this trend line, what we want to be doing is to move our stop loss to protect our position, as we want to remain patient to watch out for how price action will react to the structure to determine if we are going to be adding more position to our existing trade, or we are going to be getting ready to join a bullish momentum. So if price gets into the structure, I would advise us to move our stop loss to somewhere around the $76.60 level, somewhere around here. Lock in some profit there and watch out to see how price action will react to this level. So if buy pressure resumes here below this, on above the structure on our lower time frame, it could be something like a double bottom structure, breakout retest on our lower time frame, then we could join a rally to the upside. However, if price breaks down this $76 level and this bullish trend line, sell pressure below the structure will be inciting another opportunity to add more position to our existing trade. So these are my views here on the US oil for today. Then talking about joining this decline for those who had missed out on both of these opportunities, remember I told you that we should wait for price doing a retest of the $77.50 level. And if while waiting for this retest to happen, price might likely break out of that structure to retest the $78.20 area. And if that happens, we continue to remain patient, considering the fact that price has broken that demand zone at the $78 level. So we want to be looking out for selling opportunities. So we might likely see price come back to do a retest of that demand zone that was broken. Remember this demand zone at the $78 level here, that was broken. So if price action comes within that area, we might be seeing some selling pressure from the structure to incite another wave to the downside. So even if price breaks out of the $77.50 level, we still continue to look out for selling opportunity, as long as price remain below this demand zone at the $78 area. So this is what we shall be looking out for going into the New York session on the US oil. If you have any questions regarding what I just explained so far, feel free to drop in your inquiries in the comment section, and let's see how I can be of help in that regard. So I will be taking the next 10 to 15 seconds to read through the charts and see if there are any questions before we move on to the next option. So what do we have right here in the comment section? Let's see what is happening here. All right, so we have a lot of highs and hellos here. Okay, so I can see 428, all right, 620, 828, 780, 250, all right. Susie MB, hey, how are you, Susie MB? Joan Liba, good morning. Roro Noazak, good morning to you. 8603, good morning, how are you doing today? Ritsu, hello. Mayura, how are you? All right, so in the absence of no questions, I will be assuming that we're on the same page here. So I hope you screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this pair. So moving on right now, we shall be going into the next option, and the next option we are looking at right now is the US tech. And on the US tech, we have been quite profitable as well on the US tech, as price action has continued to find lower lows and lower highs. And remember, during the live session yesterday, we identified a channel between the 12,200, which was the resistance point for this week, and the support level sitting around the $12,100 level. And I told you I took advantage of a trading opportunity at the breakdown of the $12,100 level, and I gave kudos to those who took advantage of this move too as well. And for those who missed out on this opportunity, I told you that let's remain patient and then wait for probably price comes back to do a retest of that zone in anticipation of another wave of bearish momentum. And in fact, we had the retest, but price was unable to get to our previous entry point, but we saw selling pressure around this area on our lower time frame, giving us an opportunity to join a decline from below the 12,050. If you had joined this move, kudos to you for being on standby to catch this move, as you will currently be running with about how many pips in profit now? Over 200 pips in profit. And for those who are taking advantage of that initial position, you will be having over 250 pips in profit. And if you have two positions running right now, you will be in close to 500 pips in profit, which is quite massive on the second day of the new week. And with the current situation here, remember I told you how important the $11,900 level is here, where I told you that as soon as price tests that $11,900 level, we want to be moving our stop loss accordingly to lock in some profit, as we want to be seeing how price action will be reacting to the structure to determine if we are going to be adding more position to our existing trade, or we are going to be getting ready to join another wave of bullish momentum. And in fact, you saw how that level has been a major determinant of price action throughout the course of last week. It was a selling niche. We saw the breakout of that structure during the later part of last week's trading session. And from a technical standpoint, whenever we have a breakout of a structure, there is a likelihood that price action will come back into the structure, do a retest to incite another wave of bullish momentum. So that is why the $11,900 level, it's a very, very significant structure at this point. And in addition, and to lay much emphasis on the importance of the 11,900, I want us to look at what has been happening here since the beginning of the year on the US tech. Here, if you look at what is happening, we have a bullish trend line after connecting the series of higher lows here, and look at how that bullish trend line shares a beautiful confluence with that 11,900. So we are at a critical confluence right now as price action falls within the 11,900, and we're beginning to witness some consolidation phase around that area. We are participants in this market are looking forward to what the next line of action will be. So going into the New York session today, we had a sell breakdown of the 11,900, which has triggered another sell position below the structure. So if you are taking advantage of that one as well, kudos to you for catching that move. But what I will say here is that if you are sold below the 11,900, kindly move your stop loss accordingly to somewhere around the 11,900 area, where we want to see how price action will be reacting to the current structure that we have here. Remember, price is currently on that bullish trend line, which has been guiding bullish momentum since the beginning of the year. We might likely see a false breakdown of that trend line, and price might reverse to continue to incite another wave of bullish momentum. So we need to be very, very conscious here. So if you are traded below the 11,900, move your stop loss to somewhere around here or above the 11,900 to lock in some profit while we wait out and see how price action will react to this bullish trend line. And for those who are taking advantage of this move since yesterday, that is those who sold below the 12,100 and the $12,050 level, what we want to be doing also is to move our stop loss, and I think around the $11,950 level here seems most appropriate for you to move your stop loss. Let's give room for price action to breathe. Let's see how price reacts to the structure to determine if we are going to be adding more position to our existing trade. So with all the information we have here, let's quickly run through the daily time frame. Let's have an holistic view of what is really going on in this market. Let's know if the sell momentum, the sell position we are in right now will also remain valid for today, or we might be likely seeing some demand zone or potential support level that might likely incite a bullish momentum. So in that regard, we shall be scaling back up into the daily time frame. Let's see what is really going on here, and then let's get ready to make a decision for today. So on the daily time frame, remember yesterday we identified the fact that price action has been bearish, and to further emphasize that, we have this bearish trend line after connecting the series of lower highs. However, if we zoom into the current structure and monitor how price action has been reacting to these 11,000 level since the beginning of the year, we saw that price has been bullish, and as soon as price got into the $12,100 level, a level which has traces of selling pressure in the past, here we saw some selling momentum coming at this point. And prior to the retest of the 12,100, we saw the breakout of the 11,700, a level which shares a beautiful confluence with that bearish trend line we identified earlier. And from a technical standpoint, whenever we have a breakout of a structure, there is a likelihood that price will come back, do a retest of either the 11,700 or this bearish trend line around the 11,500 area, where we might likely be seeing some buying pressure that will be inciting another wave of bullish momentum. So for those who are for us that we have been in this trade since yesterday, we have moved our stop loss to lock in some profit as price action has broken down a key point here at the 11,950. So going into the New York session today, we want to continue to see selling pressure below the 11,950 to feel comfortable in our sell position. So going back to the 1 hour time frame now, we're going to be looking out for how we could add more position to our existing trade. And we should also remember that we have a key level at the 11,700 and 11,500 area, which shares a confluence with that bearish trend line, and there is a likelihood that if price comes into that structure, we might likely see some buy pressure around this area. So we want to keep that also in mind, as this area will at this point in time be a potential take profit target zone in the meantime for the current sell position. So for those who had sold this US tech here, let's have our take profit target somewhere around the 11,700 and 11,500 in the meantime, while we continue to monitor price action. So going back down into the 1 hour time frame, we shall be using the 11,950 as a yardstick for further trading opportunity. So now we have the 11,950 here, which we have labeled as the 11,950 900. So let's readjust this entry to fit in that current structure that we just identified now. And I have to do a relabeling of this, so we shall be labeling it 11,950. So going into the New York session today, this is what we shall be using to guide our trading activity. And in addition to the 11,950 is this bearish trend line, which I was able to identify after connecting the series of lower highs. So this is what we have here since the beginning of the week. We have been seeing price continue to respect this bearish trend line. So I will also be advising us to use this as a yardstick for trading activities. So for those who are not yet in this trade, we might likely see a situation where price comes back to either do a retest of this trend line or a retest of the 11,950, where selling pressure below the structures will be giving us another opportunity to add more position to our existing trade. So if you are not yet in this trade, we shall be looking out for selling opportunities at the retest of either the 11,950 or the retest of the bearish trend line here to join a decline to the downside. Now, considering the fact that we are around the bullish trend line here and it appears that price has broken that bullish trend line, we need to see further confirmations for us to join this decline if the breakdown here becomes valid. And to be able to know if this breakdown is valid, we have a structure here at 11,880 as well, which we can be using to also guide our trading activity. So I will be showing you how we will be using these structures during the New York session in a moment. Let's label this one first. Okay, so this is what we have right now. So we already have the breakdown of the 11,880, a level which has been a buying niche for over 6 hours before the breakdown happens here. And it also shares a beautiful confluence with the bullish trend line and the bearish trend line area. So if you had missed this one, what I'll advise you to do right now is to wait for price action, do a retest of the structure to further add more position to our existing trade. And if you are not yet in this trade, well, you want to be joining if price does a retest of that structure. And where is our take profit target here? I told you that our take profit target will be between the 11,700 and the 11,500 area. So whichever area suits you around that structure, you can be placing your TP target, at least in the meantime. And we also have a structure here at 11,600, which we can also use as a TP target if you are looking for a specific structure to take your profit on the sell momentum that we have here. So let's see how price action plays out. If this breakdown of this bullish trend line will be valid, then we want to be seeing a retest of the structure to join that decline to the downside. However, if you are thinking of buying the US tech, I will suggest not to try that at this point in time, as we need to see a significant move by the buyers to give us that comfort to join a rally to the upside. And if we are thinking of buying at this point, we shall definitely be using this trend line as a yardstick for buying opportunity. And in addition to that trend line, we will definitely be using the 11,950 level as a yardstick for buying opportunity. And how do we want to be using this? Well, what we are going to be looking out for is price breaking both this bearish trend line and the $11,950 level to the upside to give us a signal that the trend line is no longer strong enough to hold bearish momentum. And if this happened, which is and followed by buying pressure around this area on our lower time frame, then we shall be getting ready to join a rally to the upside from this point. But if the breakout of these structures does not happen, we want to remain bearish in our perspective on the US tech. So these are my view on the US tech for today. If you have any questions, feel free to drop your inquiries in the comment section, and I will be willing to be of help in that regard. Okay, so I can see some comments here. I see IMAX. Good morning, IMAX. How are you doing today? Hey, Steamroller. Good morning to you. Okay, been hectic at work, so I've made some days but hoping to hear XA. All right, it's okay. I hope you are doing very well. I'm fine, thank you. Here, Steamroller, thank you very much. All right, glad to have you around anyways. Okay, so in the absence of no questions, I want to assume that we are good to go here. So in that regard, I will be moving on to the next pair. So the next pair we are going to be looking at this morning is the GBPUSD, and on the GBPUSD we also have a beautiful position running at this particular point in time, as price action has broken down the support level of the channel we identified during the live session yesterday. So what were we looking at during the live session? So the first thing we noticed on the GBPUSD during the live session yesterday was the fact that price was caught within a channel between the 1.2400 level and the support level sitting at the $1.23800 level. And one thing about the support level here is the fact that it shares a beautiful confluence with that bullish trend line that has been guiding bullish momentum since the beginning of this year. I will be showing you how important that trend line is in a moment when we scale up to the daily time frame, but for the sake of this, I want to run through what our expectations were yesterday and what actually happened. First of all, before we move to the daily time frame, and in fact what we saw, though we saw a false breakout of the 1.24 level yesterday and was later followed with selling pressure, and one thing that happened later on during the New York session, I think 3 hours into the New York session, we saw the breakdown retest of the 1.23800 level, giving us a good signal and confirmation to join that decline to the downside. In fact, the breakdown shares a confluence with that bullish trend line, and it was also a beautiful sign that the bullish trend line no longer have the capacity to continue to hold bullish momentum at that point. So we saw the breakdown of that structure happen, and we took advantage of that move to the downside at that point. And for those who are taking advantage of this opportunity there, kudos to you at this point, as you will currently be running with about 62 pips in profit. And price continued to drop to the downside, and remember, yesterday we also identified a structure at the 1.23400 level, where we said a breakdown of that level also will be giving us an opportunity to join to add more position to our existing trade. And what has actually happened here was a breakdown a couple of hours ago from the 1.234, and if you had also taken advantage of that one, you will currently be running with about 20 pips in profit at this point. So for everyone who are taking advantage of these opportunities on the GBPUSD, kudos to you, well done guys. What we want to be doing right now is to lock in our profit. We don't want to lose out on whatever we have gathered so far since in the last 24 hours. So we will definitely be moving our stop loss accordingly to lock in some profit. And where are we going to be locking the profit here? Well, I'm looking at somewhere right around the 1.23500 level. I want to give space for price action to breathe, as we might likely see some retracement back into structure before another wave of bearish momentum will happen. So let's give some room for price action to breathe in that regard. So with that being said, right now let's scale back up into the daily time frame and let's take an holistic view of what is really going on in this market. Are we still going to be adding more position to our existing trade here, or are we going to be having a support level that might incite a reversal pattern at this point? So in that regard, we shall be scaling up back into the daily time frame. Let's see what we saw at the beginning of the week that made us to make that decision that we have made so far. So right on the daily time frame here, we had a simple setup where price action has been on a bullish momentum in the last 3 to 4 months, and in fact in that regard, price action has continued to find higher highs and higher lows. We were able to connect the series of higher lows here to give us that bullish trend line that you can see on your screen right now. And in fact, the bullish trend line has continued to hold bullish momentum here, and in addition to that bullish trend trend line, we have a couple of structures around the 1.200 level and the 1.24500 area. And if we look at how this level has been a major determinant of price action in the last 6 months, we can see that this level has been a strong selling niche, though we had some attempt by the buyers to push price to the upside from this area in the month of April, but the buying pressure was so weak that we saw sellers take us out of all buy positions at this point to finally do a breakdown retest of the 1.245 during the month of June to signal the strength of the sellers. And in fact, since the breakdown happened in the month of June, price has continued to trade below this level to further emphasize how strong the sellers are in this market. Though we saw some attempt by the buyers in the month of December to break out of that structure one more time, but it was met with an engulfing bearish candle to further emphasize that sellers are still very strong. Now we saw what happened here in the last 2 weeks here. We saw every attempt by the buyers to break above the 1.245 level has been negated by selling pressure from that same area. So at this point, it's very, very obvious that the 1.245 level has been a strong selling niche, and this fit has been happening in the last 6 to 7 months, and we have continued to see the selling pressure begin again this week. Thank goodness we were lucky enough to be part of the sell position, and we were positioned ourselves in such a way that we could catch that move. Now the question now is, will the sell momentum continue? That is another question we want to be asking ourselves, and the answer lies in the current structure that we have here. And one thing I want us to be looking at here, considering the bullish momentum that has been guiding this bullish trend line that has been guiding bullish momentum since the beginning of the year, we might likely see a situation where price breaks down the 1.22500, a level which also shares a beautiful confluence with that bullish trend line to signal a sell-off in this market. And if we look at how price action has been bullish in the last couple of months now, you would notice that the current structure appears, a retracement phase appears to be long overdue based on this current structure. So we had the first rejection here in the month of December. We had multiple rejection here in the last 2 weeks. We might likely see a sell-off coming in if it happens that price breaks down the 1.2522500 level. We might likely see another sell-off in this market. So let's see what is really going on the 4 hours time frame. So on the 4 hours time frame, what did we identify on the 4 hours time frame? So we saw things more clearly on the 4 hours time frame and how important this zone between the 1.245 and the 1.24 level is. So in the last 2 weeks here, we saw how selling pressure resumed as soon as buyers got into the 1.24 level and the 1.245 area. And this has led to the breakdown of this bullish trend line that has been holding price action since the beginning of the year. So we have this bullish trend line that has been holding price action bullish since the beginning of the year. We finally saw the breakdown of that structure yesterday to give us a signal that we might be having a trend continuation to the downside. And whenever we have a breakdown of a structure, there is a likelihood that price will come back, do a retest of structure. We don't know where it's going to be. It might likely come to the 1.24, the bullish trend line here, the 1.238 before another wave of bearish momentum could happen, and it might not go that far anyways and probably retest the 1.23400 level to send another decline to the downside. So we are going to be seeing things more clearly on the lower time frame. And one thing I also want to let you know here before we scale down to the 1 hour time frame is that the 1.22500 is a strong demand zone which I was holding by pressure. I think mid-month we saw buy pressure here. We saw buy pressure here again last week, and price appears to be heading towards that area. So our TP target for this current sell position should fall in between the 1.22850 and the 1.22500 at least in the meantime, after which we want to see how price action will be reacting to this current structure to determine if we are going to be adding more position to our sell position, or we might getting ready to join a bullish momentum that might likely do a retracement phase into the structure that was broken to incite another wave to the downside. So we have a demand zone here, which we are going to be taking into consideration while we scale down to the 1 hour time frame. So on the 1 hour time frame, I told you we already have a sell position running, and we've moved our stop loss accordingly to lock in some profit. So going into the New York session today, how do we intend to take some trading opportunity here? Now what I'll be doing now is to bring out my line chart. Since we already been finding lower highs since the beginning of the week, I would like us to connect the series of lower highs here to give us a bearish trend line, which we shall definitely be using to guide our trading activity for today. So I will do some readjustments here, and so that this can cover all the pivot highs here. So this is what we have here. As you can see, price has consistently respected this bearish trend line, and every time price comes into the trend line, we see bearish momentum to the downside. So at this point, I'm hoping for those who had missed out on this opportunity, let's remain patient. We might likely see a situation where price comes back to do a retest of this trend line. And what makes this also interesting is the fact that the trend line shares a beautiful confluence with the structure at the 1.23400 level, a strong psychological level where we might be looking out for certain pressures around this area to add more position to our existing trade. So that is one scenario we shall be looking forward to join a bearish momentum here. Then another possibility of joining a bearish momentum falls around the 1.2300 level, another strong psychological level here. All right, I think 1.2310, I guess. Yes, 1.2310. So I would like to label that level 2 so that we can have a visual understanding of what I'm talking about here. So if instead price does not go to as far as the 1.234 here, and instead price drops below the 1.2310 level, that would be a good signal to add more position to our existing trade, as the buy positions around the 1.231 level would have been taken out at that point. So let's be on standby to catch that move if it happens, and that will be giving us a maximum of about 50 to 60 pips if price action continues in that direction. Now, thinking of buying the GBPUSD, I'm not keen to buy the GBPUSD with this current structure as long as price remains below the 1.234 area. However, if price breaks out of the 1.234 level, breaking out of that level and the bearish trend line here, we might likely be seeing this as a bullish signal. However, it is important that we look out for buying pressure around this area before we join that rally to the upside. And if the rally continues to the upside here, for me, I will be seeing this as a retracement of the previous impulse leg. Now, where the trend continuation will start, we don't know yet. If a breakout of the 1.234 level happens, then we shall be looking at the structures here at the 1.238 and the 1.24 level to look out for selling opportunities. So if a breakout of the 1.234 happens, let's wait for price to come within the structure, look out for selling opportunities from this area, then we could join that decline to the downside. But if you are a counter trend trader and you feel comfortable taking a counter trend position, or you are a scalper, you might want to take advantage of the breakout retest of the 1.234 level to the upside and ensure that you move your stop loss accordingly to lock in some profits, as you are definitely taking a counter trend opportunity and you don't want to get caught up in any sudden pullback that might likely happen around that area. So if you are not a counter trend trader, even if a breakout of the 1.234 happens, I would advise you to remain patient and wait at either this bus stop at the 1.238 or the bus stop at the 1.2400 level to look out for selling opportunities on the GBPUSD. So that is that on the GBPUSD for today. If you have any questions, feel free to drop your inquiries in the comment section. So I will be moving on to the next pair right now. I'm already running out of time, so I will quickly run through this one. So on the XAUUSD, we also have a beautiful position running right now, as we are currently running in profit. And one thing we said yesterday after identifying this channel, remember we had this channel identified at the 1935, which was the resistance point for this week, and we had the support level situated at the $1,925 level. And in fact, the $1,925 level shares a beautiful confluence with that bullish trend line that has been guiding bullish momentum since the beginning of the year. And one thing we said that whenever we have such structures is that we want to be looking forward to either a breakout or breakdown of that channel to give us a signal of where price action will be going for this week. And lucky enough for us, we saw the breakdown retest of the $1,925 level to signal that sell position that we have right now. And for those who are taking advantage of this opportunity, kudos to you for being on standby to catch this move, as the breakdown of the 1925 will currently be giving you an approximate of 1,900 pips. Then we also said that if price action continues to the downside, breaking down the $1,920 level, we want to be adding more position. And if you are also taking advantage of that one too, you will definitely be running with over 1,500 pips in profit. I also identified a structure around the 1,912 this morning, where I'm looking forward to a retest of that structure to add more position to my existing trade. So for everyone who has been part of this current position we have here, kudos to you guys for being on standby. And what we are going to be doing, especially for those who had missed out on these opportunities, is that we'll remain patient. Let's see if the market will be presenting to us another opportunity to add more position. And what we are going to be looking forward to add more position is if price comes back into the 1912 level, scale down to your lower time frame, look out for selling pressure, then we want to be adding more position to our existing trade. And if a further breakdown of the $1,900 level happens, we want to be adding another position to our existing trade here. And one thing about the 1900, which I would like to share with you, is the fact that it has been a strong demand zone. So we want to be very, very careful. As soon as price tests the 1900 area, we want to be patient enough to see how price action will be reacting to that structure to decide if we are going to be adding more position to our sell position, or we shall be getting ready to join a rally to the upside. So if price gets into this area and we start seeing some buy pressure, we might likely be getting ready to join a counter trend opportunity that might do a retest of the trend line that has been guiding bearish momentum since the later parts of last week, to incite another wave of bearish momentum to the downside. So let's be on standby to catch any of these opportunities when price action comes in. So if you have any questions, feel free to drop your inquiries in the comment section as we get ourselves prepared for the New York session today. Then I would want to run through the last pair for today, which is the EURJPY. I'm so sorry I had to run through this quickly. I'm short of time. And here we are on the EURJPY. Remember, during the live session yesterday, we were around the 41.600 level, where we said we shall be looking forward to a breakout of the structure to add a buy position. And in fact, price action broke out of that structure and it moved about, how many pips was that? It moved about 37 pips in our favor before we saw the sell momentum that took price out of this current structure. And for me personally, it was at break even. And one thing we noticed here is that this sell momentum has continued to go to the downside, though I didn't take any of this because of this engulfing candle that we have here. And if you are taking it, actually congrats for you for taking that move. But one thing we want to be looking at is to see how the structure we have right now will be helping us to make a decision for the New York session today. Now, remember what we identified here during the New York session. During the live session yesterday, we identified the resistance point of a channel at the 141.600, and we also identified the support level of the channel at the 140.5. 40.800 area, where price action appears to have been caught within this channel since the beginning of the week. Though we had the breakout of the channel here during the course of yesterday's trading session, but price action dropped immediately below that structure, and as soon as price got into the 140.800, what did we see here? We saw an engulfing candle. We saw some rejection, which led to this engulfing candle that took price back to the upside at this point. So going into the New York session today, what is going to be our plans? What structures are we going to be using to guide trading activities for today? Well, if we look at what we have here since the beginning of the week, we have a bearish trend line, which if selling pressure continues here, this bearish trend line will be valid to guide selling opportunities. So with the bearish trend line we have here since the beginning of the week, we might likely see price break down the $140.800 level to incite another wave of selling momentum. So for me, I will be advising us to remain patient. Let's see if a breakout of the 140.800 level will happen to incite another wave of bearish momentum. But if we take into consideration this impulsive candle that happened yesterday, and at the same time taking into consideration what happened after price got into the 140.800 level a couple of hours ago, we can see that it led to this engulfing candle here, and I'm of the opinion that we might be having another wave of bullish momentum. So for this sake, I have a structure sitting at the 141.200 level, which falls right above outside that bearish trend line here. So what this simply means is that if price action breaks out of both this trend line and the 141.200 level, we want to be looking out for buying opportunity above the structure, and we look out to add more position if price action breaks out, retest the 141.600 level to continue to go to the upside, and a further breakout of the 142.00 level will be welcoming additional position to our existing trade. So it's quite a simple setup we have here on the EURJPY for today. So I hope that we'll be on standby to catch either of those moves when they finally happen. So on this note, I would like to call it a day, but before I do, let's quickly run through all we have done today. Let's do a recap, especially for those who had missed out from the beginning of the session. So today at the beginning of the session, we were looking at the US oil. That was the first commodity we looked at, and we actually profitable on the US oil since yesterday, as we took advantage of the breakdown retest of the $79 level, and then we added more position at the breakdown retest of the $78.20 level. And for those who had missed out on these opportunities, I have advised that we remain patient and see if we are going to be having a retest of the $77 level, followed by selling pressure on our lower time frame to join a decline to the downside. So let's be on standby to catch that move if that happens. And if it happens such a way that price breaks out of the $77.50 level, there is no point to panic. Let's see how far this is going to go. We could be looking out for selling pressure below the $78.20 level, which also shares a confluence with that demand zone that was broken, or we might likely see selling pressure below the $79 area to join that decline to the downside. So we need to be very, very patient at this point. And remember, we have the OPEC Plus meeting coming up tomorrow, where they are going to be deciding on their production target for the year, and this is definitely going to be bringing some liquidity into this market. So I will advise us to have moved our stop loss accordingly to lock in some profit in whatever position we are in right now. Then moving on, we talked about the US tech for today, and on the US tech as well, we are also profitable on the US tech so far, as we have three positions running right now. We took one at the 12,100, another one at the $12,050 level, and another one right here at the 11,900 area. And for those who had missed out on this opportunity, I told you how important the current structure we are in is right now. And to guide our trading activity for today, we have identified three setups we want to be using, three structures we want to be using to guide trading activities. The first one is the bearish trend line that you can see here. After you have connected the series of lower highs since the beginning of the week, we have that bearish trend line. So it is very obvious we have been bearish since the beginning of the week. Now, what makes the structure very interesting is the fact that price action is currently oscillating right around that bullish trend line, which has been guiding bullish momentum since the beginning of the year. And as a result of this, we have the $11,800 level, $880 level identified, and we also have the $11,950 level identified. So what I said is this: to join this trend continuation, we want to see price action do a retest of either the 11,880, the bearish trend line, or the 11,950 to join a decline to the downside. So if certain pressures happens around this area, we want to be joining any bearish momentum to the downside from that level. However, even as we are looking out for bearish momentum here, we should also take into consideration that if price action breaks out both the bearish trend line and the 11,950 to the upside, and if it so happens that buy pressure resumes above the structure, we will definitely want to join this counter trend opportunity to the upside, as the bearish trend line here will definitely not have the capacity to hold bearish momentum any longer. So I wish you best of luck on that one. Then we went on to talk about the GBPUSD, where we already have a profitable position running at this point. In fact, we have two positions running after taking advantage of the breakdown retest of the 1.238 yesterday. We also added another position during the early hours of today below the 1.23400 level, and price action appears to have found the support at the 1.23100 area. Now, to guide trading activities for today, we have identified a bearish trend line. So this is a trend line emphasizing how the price action has been for this week, which is bearish. So we expect price to continue to respect this bearish trend line if it's going to be going to the downside. So for those who are not yet in this trade, I have told you that we have two expectations for selling opportunities here. The first one is we shall be looking out for price coming back to do a retest of that trend line, and in fact the trend line shares a beautiful confluence with our structure sitting at the 1.23400. So if price action comes within that level, we want to be looking out for selling opportunities on our lower time frame. If we sight selling pressure below that structure, we join to the decline to the downside, and if price breaks down the 1.231 level, we had more position to our existing trade. Then the second situation we have here is look at the support level at the 1.23100 level. Here you can see in the last 4 hours buyers have been rejecting that level. So if we see a breakdown of that structure, it will be a good sign to join that decline to the downside. So let's be on standby to catch either of this move. Then I said something here based on this current structure, and that is if price at any point in time breaks out of the 1.234 level and this bearish trend line, then we want to be patient here and see how this move is going to go. Remember, we have a breakdown of that bullish trend line here that has been holding bullish momentum since the beginning of the year, and from a technical standpoint, whenever we have a breakdown of structure, there is a likelihood that price will come back to do a retest of that structure to incite another wave of bearish momentum. So if a breakout of the 1.23400 level happens, we don't want to panic. We want to remain patient and watch how far that move is going to go. So we shall be waiting at the 1.238 to join another wave of bearish momentum, and if that level is broken to the upside, we shall be waiting at the 1.2400 level to join another wave to the downside. So let's be on standby to catch either of this move when they finally happen. Then we went on to talk about the XAUUSD, which is also profitable at this point, as we currently running with over how many pips now in profit on this one. We have the first one running with over 2,000 pips and the second one running with over 1,500 pips. So we have over 3,500 pips in profit on the XAUUSD, and I've told you to move your stop loss accordingly to lock in some profit. And for those who had missed out on these opportunities that we had since yesterday, I have told you that we shall remain patient here and see if we are going to be having a retest of the $1,912 level so that we can add more position to our existing trade. And if price action further breaks out of the $1,912 level, we might likely see a situation where price comes back to do a retest of the $1,920 level, a level which was broken during the New York session yesterday to incite another wave of bearish momentum. So let's be on standby to catch that move when it happens. Then I also laid emphasis on the importance of the $1,900 level, which I told you has been a strong buying niche in this market in the last couple of weeks. Now this 1,900 has been a strong level, so we want to see what happens around the 1,900. Personally, I have my TP target there, but you can extend your TP target if you really want to maximize your profit. So I said that let us see what happens around here. So if price action tests this zone at any point in time during the New York session today, let's move our stop loss accordingly, probably somewhere around the $1,906.50 level. Let's around the $1,907 level. Let's move our stop loss accordingly, and let's wait out and see how price action will be reacting to the structure. Remember, it's a strong demand zone in the past. Price might likely come back into that level, transition into a reversal pattern like a double bottom structure to incite another wave of bullish momentum. So we want to be very, very mindful of that structure. And if at any point we have a breakdown of that level, we might likely be looking out for another opportunity to add more position if we sight selling pressure below that level. So let's be on standby to catch this move when it happens. Then we close the day with the EURJPY, where I told you that we were taking out of our buy position yesterday at break even here, and since then price has continued to find lower lows and lower highs. So to trade the EURJPY today, I have told us how we want to be using the structures that we identify here. So first of all, we have a bearish trend line which we connected after connecting the series of lower highs here. So we have a bearish trend line which has been guiding that bearish momentum, and in addition to that bearish trend line, we have a structure at the 141.200. So I told you that breakout of the trend line and the 141.200 level is a good opportunity for us to buy, and a further breakout of the 141.600 will welcome additional position. And if we are lucky enough for this week, price action breaks out of the 142, we shall be adding more position to our existing trade. However, if we take into consideration this bearish trend line here, emphasizing the strength of the sellers in this market, we might likely see price break down the 140.800, where I will be having a sell order to join that decline to the downside. So let's be on standby to catch either of this opportunity as price action is being monitored. So I hope I was able to simulate all the possible scenarios that would likely happen on all of the pairs we have been monitoring since the beginning of this week. So I wish you best of luck during the New York session today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review all the pairs we have been monitoring since the beginning of the week, and also get ourselves prepared for the New York session tomorrow. Do have a wonderful evening. Bye bye.